I've heard you've been running your business without knowing your cash position. There is one tool I can pass on to you, and that is called the 13-week cash flow forecast. In the next 4 minutes, I'm going to show you exactly what it is, what goes in it, and how it changes the decisions you make. So right here is the 13-week cash flow forecast, and it's exactly what it sounds like. You lay out the next 13 weeks, roughly a quarter, and you map every significant cash movement, what's coming in, what's going out, and what's your bank balance look like at the end of each week. That's it, no complexity, no magic, just visibility. And the reason CFOs love this tool is very simple. A 13 weeks cash flow forecast is long enough to see problems forming and short enough that your numbers are actually grounded in reality. If I ask you what your cash position will be in week 8, you probably don't know it. This tool tells you, and it tells you before week 8 arrives. Let's break down the structure. You have 3 sections. Section 1, inflows. This is cash that actually lands in your bank, not invoiced revenue, not accrued income. Those are customer payments based on your payment terms and any advance payments or deposits you are expecting, VAT refunds if you have credits sitting with the authority. Be conservative right here. If a client typically pays on day 45, do not forecast them on day 30. When it comes to cash, do not be optimistic. Be on survival mode. Now, section 2, cash outflows. This is where most founders underestimate. Payroll and benefits are fixed, non-negotiable. Rent and lease commitments, supplier payments based on your agreed terms, VAT filing dates. In the UAE, for example, that's quarterly, and it hits hard if you haven't planned for it. Loan repayments, general operating expenses, and any planned capital expenditures. The discipline here is using actual due dates, not rough estimates. Now, the interesting part, that is cash position. Your cash position. The model takes your opening bank balance, it adds the inflows, subtracts the outflows, and gives you a closing balance for each week. You are looking for 2 things right here. Weeks where the balance drops dangerously low, and the trend. Is it building the business or is it destroying your cash position? Now, the buffer. This is your safety net. The buffer and the decision zone. In any business, I always build a buffer threshold, which is a minimum cash balance that should never be breached. For a small business, that might be around 50,000 dirhams. For a large SME, it could be a full month of fixed costs. The moment a week dips below that line, the forecast flags it. You are seeing that problem 6 or 7 weeks before it arrives. Then there is what I call the CFO decision zone. For each week, you note down the confidence level of your forecast, whether it was high, medium, or low. And one action, just one action, whether it's chasing invoices, chasing deposits, watch for the balance, review OPEX, review forecasts. This forecast isn't just a numbers sheet, it's telling you what to do and when. Now, how to use it week by week. The model rolls. Every Monday, you update it with the actuals and add another forecasted week. And reassess. It will take you, once it's built, it will take you only 20 minutes a week to update it. What you will notice is that the decisions you used to make on instinct, should I hire, can I buy equipment, is this deal worth it, suddenly have a financial framework behind them. So if the forecast shows a comfortable buffer for the next 10 weeks, you can move. If week 6 looks tight, you know to chase receivables now, not then. The gap between seeing trouble at week 8 versus reacting at week 8 is the differentiator between a founder or a business owner who understands their business financially and the one who is only relying on a bookkeeper. I've built this template using AI for the sake of presentation only. For each business, it must be custom built. I'll be adding the link to this file so you can understand how it's built. All right? If you're a founder running a business without this tool, you're running without instruments. Build the model, update it weekly, reassess it, and you will never be surprised by a cash crunch again. If this was useful, subscribe. On a weekly basis, I'll be discussing financial and CFO topics for founders and business owners. I am Abdul, a fraction CFO and founder of Nimbus Finance, and this is CFO to Founder.